Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Wednesday, and we're at the 1st of September, 2021. The time 6 p.m., and that is Central Time. You know, I wish I could be inside of somebody's head. President Biden was meeting with the president of the Ukraine today, offering him assurances that the U.S. will protect them and be there to protect them against any advances Russia might have against them. Afghanistan, is that going through the president of Ukraine's mind? How good and what we did for those allies and how we left them on the tarmac and so on. You have to, I can't write this stuff up. It's just, to me, whatever it is. Let's go on and talk, though, more about the markets. The big elephant in the room is going to be the jobs data on Friday morning. The elephant, to me, is just this. Is the Fed going to be able to say at their September FOMC meeting, their monetary policy meeting, this is it, we should now pull the plug and begin the tapering? Or is the jobs data going to be a disappointment? ADP was a huge disappointment in the numbers today. It was only 60% of what the market was looking for. So, and say, now we got to put this off again until we see that the market's got better footing. I can't answer that. I don't think it has anything to do with interest rates immediately going higher or lower, and I don't think it's going to be a market moving event other than it's right in front of Labor Day and the trading is thin. That's how I'm viewing it. If gold wants to be good, this is when it has to do it. Energy, you're going to have more product coming to market. OPEC Plus met today and they said, let's go for it. 400,000 barrels a day starts. They'll meet October 14th to decide if they give the next 400,000 barrels. So that's where you're at there. When I take a look at the S&P, you're at a new all-time high. If the market were to close right now, you're up about 1/3%. But up 17 handles, as we call it. The market is stalled a little bit here, and that's what I'd call it, a stall, not a trend change. You have higher lows, higher highs. You have a market that might want to give you a break. I'll show you that in a minute. And you're stalling against the upper Bollinger Band. Now, the key here is that the momentum is locked in. It's bullish. So I think on breaks now, the trade is going to buy. I think that this is the zones that as it comes down, as long as the market holds on with that red line and it doesn't close under 79, what happens is there's a key moving average that I show in my morning subscriber video that hasn't been hit. And that's what they're looking for. It's above the 18-day average of closes, and that's the number that I think they'll be nibbling on. I know that in my updates, my written updates in my morning, I've been giving traders that number because it's the holiday to cut the position size down, but to nibble into the long side if that's hit. The NASDAQ is the same. You have your embedded reading. I need the break where the market doesn't first make a higher high, and off of that I'd be interested in having my subscribers be purchasers of the market. I'm wrong when and if the red line closes under 79. The Dow is not there. The Dow is overbought, not embedded. This market's fighting a battle against the 18-day average. What's clear there? It's the value stocks that are moving. The growth stock, well, it's actually the growth stocks. The internet stocks are making the move, whereas the value stocks are the ones stalled out. And the Johnny come lately to the party, the Russell, has come alive. We pointed that out here, at least I did to you recently. I said, uh-oh, it's the first time it's gotten and stayed over this number and started moving out towards the upper Bollinger Band. Did it once here, but then you failed quickly. Right now, you're not failing. So I see a change in the nature of the market. If it embeds, you might want to add this to your arsenal to start going with. Let it get out of that overbought condition. A way to cheat the market and to see if the market's going to stay strong is you watch the VIX. If it keeps falling, that's a bullish sign. Nobody wants the insurance, and the market's saying it's all systems go to the upside. Should it fall down to the lower Bollinger Band, I think you'd have aggressive put writing for a move back to the 18-day average, or hopefully back to that number. In the 30-year bond, can you get more neutral? You're just stuck now. 1, 2, 3, 4. practically 5 days just stuck at that 18-day average of closes. I don't know why the quotes on the 10-year note haven't come through, but they haven't from the exchange. These are live feeds, so I'm not quite certain what's going on. But you can see you're stuck here at the 18-day average. Trend down, bias up in these two markets because you're over the 18-day average, but the swing line down. They're probably marking time until the jobs data report. In the dollar, look at how fast it has reversed course. And it has thrown out, even on what we call our price counts, new downside targets that are in this range. So I'm looking at that carefully, but it is an oversold market. I don't think you attract a lot of new selling in oversold markets. I certainly wouldn't tell my subscribers to sell that. In the eurocurrency, it's the flip-flop of the dollar. You're very overbought, and you're seeing that develop here, and you're in the resistance zone of the upper Bollinger Band. Then in the British pound, stuck at neutral. It's got a bullish bias, because you're over the 18-day average for a moment. You've got higher lows, higher highs, and momentum up. But I don't like that the stop would have to be under that low. It's a bit too much of a dollar risk. Dollar risks play as much a game in chart analysis as anything else. If you don't develop a good method of that, you're missing a filter on your trading. So you want to employ one. Bitcoin, all I was looking on this break for was a move to the 18-day average. Remember what we talked, this was a contra-trend break. Why contra-trend? While the trend was down, the bias was up the whole time since you were over the 18-day average. Often that results in giving the slow stochastic a chance, once it loses an embedded reading or is overbought, to get down to a zone where it's no longer overbought, and it's exactly where you're at. This is the September. Yesterday I had the August, if you'll recall, so I've made that fix for you. In the Brent versus WTI crude, differential still favoring what market? Still favoring, obviously, the Brent. The higher that number goes, that's the spread over Brent from our WTI oil. And as you can see, are we going to embed is the question. So you can't count tonight, Thursday. So Wednesday, both numbers were over 80, but not the day before. You're just plain overbought, and you have the same situation here in the WTI crude, and while the trend is up, you're fighting your battle back at where it should, the 18 and the 100-day average of closes. Let's see what it does. When you're overbought, you do one of two things. Prices either break down to get rid of that, or they embed, which adds fuel to the fire, and you typically make a move then to the upside. In the heating oil market, same thing. You're not embedded here. You need another day of action. Certainly the trend up, and I'm a fan of this market now because as we head into the cooler weather, it's going to come into demand. Air travel's been the killer for that because the distillates, and that's what heating oil is, that's where you're not getting the demand, but there's such short supply, they're sort of balancing each other. And we are in short supply. All these fires that we have on the west coast of America, northwest, these are taking a toll on fuel supplies. I mean, I had told you that when I went to Montana, what I ran into, and it has not changed. Here, you're over the upper Bollinger Band, and you have not had what I'll call a clear upside breakout. You had a chance at it right here. Remember, we were talking, and this was back on Friday, that if the market got over that and could get another day where you closed again higher in the top quadrant and you get a breakout. Complete failure. So you're on borrowed time. I think you're a little bit too stretched in the market. Does not mean I'm not bullish, but I think you're very stretched. You're going to see a special that I start bringing on for Labor Day, but in the meantime, I might bring it on tomorrow. It lasts for 6 days to September 8th, but I'll leave it at that. I'll surprise you. Your mailbox will get it if you're on my mailing list. But if you're interested in these indicators and learning, this is one of the best pieces I've ever seen on it. It's from our good friends at Modern Trader. They have put this together years ago, and everything I read, because I want to send new things to my clients, and I go to the exchanges for their pamphlets. They've got teams that write it up. I haven't seen anything to beat this. If I did, I'd present it. They're free from the exchanges. You might want to take a look. Just go to our website under free offers. Everything you want is there, and I'll see you tomorrow.